Hello, good evening. It's Adil Fazal here, bringing you a review of the European markets for the trading session or end of trading session, the Wednesday, the 15th of April 2020. Okay, so back to these daily videos now. Hopefully, I keep saying I'll be back, but then unfortunately, given the lockdown and obviously kids off as well, it certainly proves to be very hard work. But nevertheless, I'm going to be committed now going forward, and at least do the European session. If I have more time, I'll do the US session as well and give you a review for the next trading day. Okay, so let's get started. Basically, we had risk aversion obviously kicking in today, so let's have a look. Let's just try and summarize all the key points so that we know if the opposite were to occur, then the market obviously would swing the opposite direction. So we had weaker economic data out of Europe generally overall. Germans forecasting a decline. We had rising cases in Spain, and Spanish cases certainly hitting a 6-day high in terms of deaths. So again, I know it's very hard not to get emotive, and as traders, that's what we're focusing on, and we can't get desensitized either to the obviously the death rates and the sheer number of people that are dying, and certainly a prayer goes out to those individuals. Also, in terms of Scotland and Wales, the highest death rates as well so far, so that certainly did send a shockwave. Oil prices certainly falling quite sharply, even though the actual attempt at controlling the supply or curbing supply certainly hasn't worked, because it's more of a demand shock in terms of oil, and given the fact that the IMF certainly forecasting weaker growth going forward, that certainly sent shockwaves as well. And oil prices certainly bearing the brunt, which in turn obviously hurt the markets overall. Asian markets were down due to risk aversion. Mr. Trump certainly sparking off the debate with regards to the World Health Organization. That's certainly obviously not looking good, and also given the fact that the Americans are attempting to blame China and starting to demonize China, that certainly isn't a good way to certainly cure or reach a potential cure with regards to this virus, whether it be social, or whether it be economical, etc., etc. Okay, so that certainly did send shockwaves. Okay, in terms of the other reasons why we sold off as well was Citi, Bank of America, and also Goldman Sachs. All their earnings certainly showing an increase in loan loss provisions. So again, given the fact that individuals are obviously having to foreclose in America, and obviously in the UK as well, businesses going under. Again, loan loss provisions certainly is obviously a concern in terms of bank profitability, given the fact that they've obviously under a lot of pressure as it is, given the low rates environment, and also given the fact that they can't obviously do any buybacks as well in terms of dividends. So therefore their share prices certainly are certainly they've reached a plateau, and certainly no room for a movement higher. Okay, so credit card spending as well falling in America, down 30%. Retail sales, industrial production, and beige book all came out negative in the US as well. So again, all signaling risk aversion. So oil prices down, demand side shock overall in terms of the consumer and the economy, and that certainly did send obviously the market spiraling down. Now, in terms of the bullish arguments towards the end of the day, we had Ms. Merkel talking about a potential reopening for schools early May. France as well, obviously touting further stimulus. Trump certainly stating that he's going to be paying oil companies to store oil, so that certainly is bullish for oil, so keep an eye out for that. Trump and business leaders certainly talking about reopening the economy, so again, that certainly is helping as well. Okay, so that's really the theme. The bearish news certainly has been baked in, and going into tomorrow, my bias certainly looks like it's going to be bullish on the back of obviously Ms. Merkel's comments about reopening the economy. Okay, so let's have a look at the technical picture now. Like I said, I'm trying to keep these videos very short, but fundamentals certainly are the key driver in this market right now, folks. If you're not focusing on fundamentals, from my understanding, you shouldn't be trading this market, full stop. Okay, so let's have a look at the German DAX. Okay, so German DAX retraced up to 38 to 50%. Certainly was asking for a potential sell-off, and given the fact that obviously Spanish cases flew higher in German DAX, so German data or German GDP, etc., was certainly forecast to move lower, and also given the fact that the IMF was warning us as well. Okay, so we've had quite a sharp rally, given the fact that we've rallied from 8260. I mean, it's been quite an impressive rally, more than 2,000 points. So certainly a pullback was more than warranted. Okay, here, and also given the fact that weaker US data certainly caused the euro to start to appreciate. and that certainly had an impact on the export side of the equation as well. Okay, so here we go. Bearish engulfing candle on the day. If we do obviously continue to flush lower, then you are seeing support at gap fill, which is 10,120. After hours, the market certainly is under pressure at the moment. We are approaching 10,200, and again you are looking at support around that 10. Just to be exact here in terms of gap fill, I mean you're looking at around 10,100. Okay, so keep an eye on that potential figure. Moving lower on the daily chart on the German DAX, a 60-minute chart support. You do have support here around the 10,200, and obviously gap fill then is at 10,070. If you do continue to flush lower, then you are looking at 9,500, 9,600, and support down below at 9,400 with the gap fill at 8,800. So again, all these scenarios certainly possible. This is a key diagonal trend line that I had an eye on regardless. Okay, it looks like we've broken lower. Okay, let's keep an eye out for that potential zone. Okay, so German DAX opening up and certainly moving low. So again, you are seeing support around this region, 10,220, and if you break lower, then obviously gap fill at 10,070. So watch out for those two zones below with regards to German DAX. The French CAC, let's just give you an insight here, daily chart on the French CAC. Again, you were certainly asking for it given the fact that you're approaching gap fill on the daily chart. So risk aversion certainly was expected to a large extent with regards to the French CAC. If we do continue to flush lower on the French CAC, then gap fill is seen around the 4,170 zone, so watch out below. But again, my bias certainly will be looking to be bullish on the back of Merkel's comments, so keep an eye out for that with regards to opening the economy. 60-minute chart on the French CAC, you've got support here at 4,330, and if the market does obviously continue to flush lower, then you've got gap fill at 4,150 and further below at 3,920, so watch out for those two zones below. In terms of the Euro stocks, before we move on to the FTSE 100, 60-minute chart certainly was expecting to be flushed regardless. I had a short position overnight. Again, it's very hard to really argue from a technical perspective with regards to the Euro stocks. The only real argument really was previous support equals resistance. And again, that was a weak one regardless. You can't really rely on previous support equals resistance. My argument really was more of a fundamental nature, okay, and which I'm not going to elaborate because it does involve the US markets, okay. But nevertheless, you are seeing support now around this 2790 zone. If that were to crack, then the next support is seen at 2660 and all the way down to 2615. In terms of the FTSE 100, it's been a very impressive flush today. Obviously, a daily chart certainly signaled it anyway. As you can see here, key resistance, and you're into that 50% retracement zone as well. Given the fact that oil prices certainly obviously falling, or even with the supply side of the equation being controlled to a large extent, it still caused a sell-off in oil, which in turn obviously causes a more than sensitive sell-off in the FTSE, given the fact that it is heavily commodity related, especially when it comes to the oil majors such as Shell and BP. So keep an eye out for those two, and also given the fact that the dollar obviously increased as well on the back of fears, okay, given the fact that the weaker economic data out of the US triggers a fair trade, and everybody tends to fly over on towards a dollar to a large extent, even though the fiscal stimulus certainly has been passed, and obviously the Fed's QE program last Friday, that certainly hasn't deterred individuals due to the fair trade. Okay, either way, a 60-minute chart on the FTSE is certainly flushing. As you can see here, we had previous support equals resistance, so solid resistance of 5,900. I have to say though, I didn't expect a 300-point flush in the FTSE. Very impressive today, like I said, again on the back of that the numbers rising in Scotland and Wales, and also given the fact that you've got oil prices certainly skidding as well. Now let's just quickly bring up the price chart of oil, so you actually have an insight here. Okay, so let's have a look here. So even with the obviously attempt at controlling the supply, given the OPEC plus etc., we've still failed to move higher. Nevertheless, the daily chart still is holding the pivot low, given the fact that if you shift over to the 60-minute chart, let's give you more of an insight. Let's try a 4-hour chart. It's probably a better way of looking at this. So taking the pivot low to the pivot high. Okay, so we're looking at a retracement now on the 75. So looking for a potential rally in oil. Okay, given the fact that the supply side of the equation certainly has held, and so from the supply side, now we're looking for a demand side rally. And given the fact that Mr. Trump did say that he was going to be buying oil and storing it as well, that should certainly help put a potential floor on the selling of oil as well, given the fact that that's a key short squeeze catalyst from my perspective. So certainly looking for a rally in oil. Don't be surprised if we close this gap up here at 48 over the next, I don't know, month, 2 months. I'm not going to give a time frame on that. Certainly looking for an inverted head and shoulders pattern here as well, as you can see here. Potential head here, okay, and now looking for a right shoulder, potential thrust. This is your left shoulder here. And looking for a potential move higher, provided we remain above the fib 75%, which I do expect we will. And looking for a potential thrust higher at 42, 43, and even potential gap fill at 48. So again, anything is possible in this market. Anything is possible. So that certainly bodes well for the FTSE 100 and looking for a potential pop on the FTSE. In terms of the chart of copper, now we have had an impressive thrust on copper. Short squeeze from a pivot just below 2 up to 2.29. We have approached the fib 50 61% and so on. But given the fact that the Fed is obviously doing unlimited QE, commodities will always remain bid given the inflationary trade. So again, keep that in mind. And also Chinese economy back online now. Given the fact that Miss Merkel did say that Europe was looking to potentially come back online, not fully, but more or less, obviously in phases, that certainly should bode well for copper going forward as well, given the fact that the potential for growth there as well. Okay, so going back to the FTSE 100 then chart. Okay, so 60-minute chart, certainly solid support around the 5590 zone, and if you prefer to push lower than 5440. Okay, looking for a thrust higher. The 10-minute chart, extremely oversold on the FTSE. We did hit surpass the pivot S3 and certainly close the gap below at 5580 as well. So looking for a potential thrust higher. 60-minute chart or daily chart certainly does have scope to potentially thrust or move lower if the numbers or death rates certainly continue to push higher. That certainly will cause risk off and if oil prices continue to skid. But my understanding and my interpretation is that we are looking to potentially form this potential base here. Look for a potential thrust higher again at 6470 if oil prices continue to march higher. Okay, so I think that's sufficient really in terms of my insight for tomorrow's trading. Wish you the best. Be sure to visit my Twitter handle and my website. Goodbye now.